What is going on, everybody? Welcome back to another episode of That Makes Zero Sense, the podcast. We had a lot going on this week in the markets. No shortage of news, no shortage of interesting price action. There was a ton of reports. There was a ton of read throughs to other companies. I won't say I was overwhelmed, but there was certainly a lot to go through. And some of the days I felt like I was reading nonstop. And by the time the open came, I felt like, geez, I wish I just had a few more hours. But that's how it goes sometimes in earnings season, especially when you don't only have earnings to go through, but there's actually geopolitical events happening. There's macroeconomic things happening. Obviously, there's tons of talk with the Fed and who's going to be the next Fed chair and what's going to happen with rates, what's going on with the yen and Japanese government bonds. There's so much going on right now, and to stay on top of it all is difficult. But we did get a lot of questions this week. I chose 5 of them, and we're going to go through all of them on this episode today. So without further ado, let's hop right into question number 1. All right, so question number 1 is, you spoke on Syndicate a little bit the past few weeks. Can you talk a bit on what you are seeing? Can you talk a bit on what you are seeing in IPOs this week and last week? Great question. IPO activity and syndicate activity, it's interesting because when the market's going up every day and there are no sectors that are really out of favor and everything seems to be just drifting higher, that seems to be a pretty good time for syndicate. And as you saw in 2025, there were also parts right after COVID, times right after COVID where market would go up every single day, and you would have deals priced at the high end of the range. They would upsize these deals, and then they would open sometimes with 50% premium, 25% premium, just these monstrous numbers. I remember there was so many deals that we participated in that opened with these insane premiums. Now, what you're seeing this week and last week, there was a ton of deal activity. I think last week there was $3.5 billion worth of new issues. I don't know what the figure is this week, but I know there was a few high profile ones. Tomorrow, Clear Street comes. Now, just to put it into perspective, Clear Street cut back the amount of shares that they're going to issue. And I want to say that the range was 44 to 48 before, or somewhere in the 40s. And they cut back the range to price it around 24 to 26. I think 26 is the high end of the range. Right now, probably at the time of this recording, they've probably announced where they priced the deal. I have not looked. I just sat down to record this. There was another deal, APC, I think Arco Petroleum. It was a gas station play, dividend play, that we participated in. That one opens broken. And I was hearing that decent color all week. Now, that's 2 deals this week. There was another one that opened okay. I'm forgetting the name of that one. Last week, you had, I want to say, 7 or 8 deals come public, IPOs. And let's say it's 7. Let's make the denominator 7 just to make this a little bit better. I think only 2 of them opened with any sort of premium. One of them being a tiny little biotech deal led by Jefferies and Leerink. And those 2 firms tend to do pretty well with biotech stuff. They know how to price them, and they know how to allocate the shares properly. So where am I going with all this? Syndicate the last 2 weeks has been poor. And I think, you can look at the market for a second and say, well, choppy market action. There's not a lot of appetite for IPOs. There's not a lot of appetite for any new issues. There hasn't been a lot of preferreds the last 2 weeks. There hasn't been a lot of syndicate really in general. There's been a couple blocks, a couple secondary offerings, but the market's not absorbing anything. And I think that's a sign of the times a little bit that this, some people are afraid to use the word bubble. I like to use the word bubble, especially in an environment like this. For lack of better terms, there's a little bit of air coming out of that bubble. And that doesn't spell good things for the syndicate market. And even some of the SPACs, I think the only SPACs that are opening up well is when you pump them up with a warrant, a right, short little timeline. But most of the SPAC deals are opening flat or unchanged. And if you remember a few years ago, some SPACs were opening at 1020, 1010, in the worst case. They weren't opening flat or broken. There was, I think, 2 today that opened broken, 995, 996, something like that. So syndicate's not looking good. And I think you can take a look at the market and understand why pretty quickly. So let's move on to question number 2. What are your thoughts on the Anduril tax AI agent and what it did to brokerage stocks this week, like Schwab? Okay, so I did see this. Schwab and a few other brokerage names that offer some tax service stuff. In the past, an enhancement or an improvement in technology has only helped names like this. And I think if you have like a private brokerage business, let's say, maybe it's not Schwab or you're using Thinkorswim, but I saw Morgan Stanley also get hit. If you're a portfolio manager at Morgan Stanley and you have a book of clients and you manage, call it, I don't know, 50 million bucks or 100 million bucks, and you have a few clients that give you their money. These people tend to trust humans and human interaction, and I read a lot of really good takes on this over the course of the week. Like, people are not going to pull their money to use a tax software that they've just been introduced to when you've had your money managed by so and so at Morgan Stanley for the last 25 years. That change is not going to just happen in one day. So to see the sell off in some of these stocks doesn't make a whole lot of sense to me. And, if I'm the money manager at Morgan Stanley or Goldman Sachs or JP Morgan, and I see a way to use AI to create a more attractive offering for the people who give me their money to manage, I'm going to use it. And I don't think that clients are going to start to pull their funds unless I'm a terrible money manager and I and I lose money consistently and I can't beat the market. But I don't think clients are going to pull their funds because there's a software or an AI that can help me do a couple things on the side. Like, sure, maybe I'll check it out. But just think about the psychology of that. It just doesn't make a lot of sense. And then we saw time and time again this week, there were multiple sectors that got hit because there was some AI development that supposedly was going to end that industry. And I get it. I get the fears and I get the initial headline, but a lot of these things are still in the works. And a lot of them are just going to end up not subsidizing, but helping existing businesses. I mean, look at software. Like, do we really think some of the largest names in software are going to be dethroned because there's a couple AI agents? Maybe I'm wrong. Maybe we'll look back on this episode and say, geez, that Alex guy was really wrong. But I just don't see it. And I think there's going to be operational efficiency gains. There's going to be cost savings. We're going to find ways to integrate AI before it makes these entire businesses obsolete. I just don't see that happening. Can you speak on Japan and what the recent election results mean for stocks, and maybe a quick take on what the carry trade is? So I can't really speak on Japan because I don't pay a whole lot of attention other I mean, I pay attention to their stock market and I pay attention to obviously some of the big news, but I'm not a avid follower of what's going on in Japan. I can't speak to the prime minister that just got elected. I know that they're very dovish and would like to see rates come down, and they would like to stimulate the economy to no end. So I'm just gonna leave that because I don't feel well educated enough to talk on the topic. However, I can talk a little bit on what the carry trade is and what that means. So for those that don't know, let's say in the US, you can borrow money or rates are at four, let's use easy numbers, 5%. And in Japan, rates are really low, let's say 1%. So essentially what the carry trade is you can borrow money in Japan, the cost of borrowing is 1%, and then you can invest it in the US where the cost, or not cost, sorry, the return on investment is essentially 5% if you put it in T-bills, right? If let's say the 5% is your yield on a 10-year bond. And so you sort of earn the spread, right? You get to borrow money in yen, convert it to USD. Obviously, there's the risk of dollar appreciation and depreciation. There is that risk, and you have to offset that risk somehow. So there's obviously the use of a swap market, forex swap market. But essentially, for the basic listener who's just trying to understand this, a carry trade is borrowing money in one country where rates are low and investing that money in another country where rates are high. Now, I want to just, that's 1A, but let's go to 1B. People sort of exasperated that trade and started to borrow money in Japan to invest it in not just T-bills in the US, but risky assets like stocks, crypto, and I've talked about that a few times before in the past on this podcast. So that's essentially what the carry trade is. So let's move on to question number 4. One day to the next, there's a new group or sector that the market participants love. How do you stay informed on everything and catch the right moves? That's a super open-ended question. I would say there's never any way that you're going to know everything going on in the marketplace. I feel like I say once or twice a day to my mentor, like, oh geez, I missed this, or I saw this briefly and I didn't really get it in the moment because I was focused on this thing and I didn't pay a whole lot of attention, or I wish I'd seen this because that was a good trade opportunity. It happens every day. There's in the S&P 500, there's 500 stocks, but there's thousands of stocks out there. There's many more, not just in the US, but in other countries that have ADRs that trade in the US. So to think that you can know everything about every stock and be informed and not miss anything is unrealistic. It's never going to happen. You can do this for 30, 50, 100 years and you'll never catch every single thing. If you want my advice, there are news outlets like Barron's. You can sign up for a Twitter, and follow the right accounts, and you can be well informed. I think that's a much more achievable goal, and that's what I try and do every day when I come into the market every morning. Is how can I be as informed as possible? I'm reading everything. I'm not wasting any time. I'm going through all the research. I've got my eyes glued to Twitter. I'm talking to people on the street, and when they hear something, they tell me, and I make note of it in my head. And if it's big news, I pay attention, and if it's sort of noise or chatter, I throw it to the side. There's also a lot of filtering that goes on, and I'm trying to do that the best that I can. But to answer the question, there's no way you're going to catch everything or find the right moves. Pay attention to flows. I know right now it's tough because it feels like one day staples are out of favor and the next day staples are in favor, like they were today, or semis are getting ripped, or then the next day semis are getting smoked. Software for a couple of days was really nice and then blew up. You had a couple bad software reports and it sort of cranked that entire group. Right now, it's a choppy time in the market. Nobody's going to argue that with you. It doesn't seem like you're getting it right day to day, but on the information piece and staying informed, I think that's pretty easy. And the answer is you're never going to be 100% informed. You're never going to have all the answers all the time. Your goal as a trader or as an investor is to be as informed as possible all the time. And that means sometimes maybe you're going to spend a lot of your evening reading when you're not even working, when the market's not even open. But that's sort of the price of success. If you want to be successful in this business, I think you got to do that from time to time, if not every day. Yeah. So, question number 5 says, you said a few weeks ago, confidence doesn't get shot as long as you have a good, profitable strategy and trading rules. How do you derive a strategy risk free? How long does it take? How do you derive a strategy risk free and how long does it take? Okay, so the easiest part of that question is how do you do it risk free? You can't. If you try and trade in a paper account, I'll show you this. To trade in a paper account is great to understand the mechanisms or the mechanics of trading. That means placing an order, placing a buy stop, placing a sell stop, understanding what the different types of orders are. That's what a paper trading account is for. Like just to understand what a buy button looks like, what a sell button looks like. How does the what's it called, the scroller work to increase your size or make the size lower. Is just to get into the feel of what does it feel like to trade, not actually putting on risk and picking stocks, because the paper trade account that's it's not good for that. You actually have to put on legitimate risk, put on legitimate capital, feel the feelings when you're trading, what it means to truly lose money or make money, and understand the emotions that you're feeling when you go through these things. You're never gonna get the full experience if you're trading in a paper account. So, like I said before, there's no way to do it risk free. If you want to be a good trader at some point, you do need to just jump into the water and see how you swim. And if you can't swim, you're going to drown. You're going to learn pretty quickly how to swim. I feel like trading in a paper account is you're learning how to swim, but you got a floaty on, you got some wings on, and you're just sitting there in the pool, and you're obviously not going to drown because you got all these aids there for you. That's what trading in a paper account is like, but at least it exposes you to the temperature of the water. And I think that's, the point I'm trying to make is, so how do you derive a strategy? You got to test stuff. You got to try things. There are some back testing tools online that you can use. There are, a lot of you can talk to your AI chatbot. There's like 10 of them out there now that you can talk to about this sort of stuff. Bump ideas off of them. When they say something that you're like, oh, that's interesting. I never thought of that as an idea. Go look it up, watch it in the marketplace. You can punch up any stock and look for that setup. There's so many setups out there. There's hundreds, thousands of setups where they apply this indicator or this variable, and you can create a system on one or two variables, or up to 10, 15, 20 variables. I don't suggest that you do that because that becomes very cumbersome and you'll struggle to find trades that tick the boxes of all 15 or 20 variables. So stick to something simple, watch it, Make sure that it works over 5 out of 10 times. And if it doesn't work over 5 out of 10 times, you got to make sure that you're winning more than you're losing on the winners versus the losers. But coming up with a strategy is just a function of time. You really just have to experiment, try a bunch of things. And I didn't really have a great system whatsoever for the first 5 years. I want to say, like, I felt like I was sort of treading water for a long time. And then it started to click, and I was like, oh, that works. Oh, this idea works. Oh, this thing that I've been watching day in and day out that's worked a few times, like, let me just write that down and let me see if that's like a pattern and if it's going to work the next 10 times that I see it. And then I'm like, oh, geez, it does. It does work 8 out of 10 times or 6 out of 10 times. I'm going to start putting that trade on and managing my risk. That's how you sort of do it. And it takes time. You're not going to find an idea on day one. You might be really lucky and you might, but I highly doubt it. Trading's a lot harder than that, and you got to put in a lot more effort than that. I know I took many, many years before I finally found a few ideas where I was like, that works, and I'm going to write that down. I'm not going to forget it. But yeah, it's just time. So that's the end of the episode. We talked about a lot there. I always try to throw in a little bit of a trading thing at the end because there's so many questions about trading, but it's so difficult to talk on in such a short form video. And I feel like I could talk for so much longer. So hopefully these things help. Next week, we're going to have another video. Don't forget to check us out on all the socials. We've got Instagram, YouTube, TikTok. I like making the little shorts every day. I forgot a couple times this week, so I apologize. Don't come for my throat. That's it. That makes zero sense. Take care, and I'm going to see you guys next Friday. I hope you have a phenomenal long weekend. We do have a holiday on Monday. US markets are closed, so don't forget about that. Take care. I'll see you next time. The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast.